Yo guys, welcome back to Stock Talk Insider. Today I want to talk about the Honest stock and what I believe is going to happen with Honest and what is actually happening at this point in time with Honest. And just in as well what I believe is very possible. Now today on the portfolio, AMD is slightly down, a little above 1%. But of course, SoFi is down 4.8%. That's because of some analysts' ratings. But of course, that's the only thing that I could find that was negative. So I do think that it's based on that. It is also fluctuating, of course, because earnings will be coming soon. And well, it can be a very big quarter this time for SoFi. So that's maybe also why it's fluctuating. But yeah, going forward. Talking about Honest, well, we have a very small position. We are down on the position, but I don't really care. It's only 7 to 8% that I'm down. And you can say that Honest is trading against and around, well, below or around $4. Now it's slightly below, around 7% below it. And yeah, so talking about Honest, most people have written of the Honest company, but what if I told you that this small cap brand could realistically hit $20 a share within 5 years? Let's break it down with simple numbers, no hype, just fundamentals, and starting with where we are now. So the Honest company, we have a PE ratio of 76. It is actually going down, the PE, because it first stands at like 101. So since June it is going down. That's one thing. And going to revenue and profits, we see that we were increasingly going up and up and up and literally going up very nicely. This is, by the way, all of the work because of Jessica Alba. She did a very great job since she came at the company. And now the last quarters we do see a slight decline and very slight beats. But still, we are actually sort of even with the trailing 12 months. But going forward in what I want to talk about, I always say about Honest in the last months that Honest is at this point not competing with their previous revenues or upcoming revenues. They are still trying to put the company in the best place possible so they can go further and compete for the best revenue possible, because now it's all about fundamentals, getting the company stronger and keep the net income and positive, and also keep increasing margins as big as I can. Now they are already at 40.4% margins, which is a very nice achievement of going over 40% in margins, especially for this sort of company and especially for the times we're in because of all of the tariffs drama and all of that type of stuff. Now, of course, it's a very sensitive stock and company if we're talking about China things and all of those things, because it's got a lot to do with China and a lot of business is going through the country of China for producing some of the products they do, and especially with makeup and all of those things, it's an important thing. But then again, they are standing. No, I want to talk about something first. So before I say what I wanted to say, we'll go to what $21 to hit that actually means. That's probably a better thing to do now. So yeah, that's what I want to do. So right now, Honest trade around $4 per share, I said before, with a PE ratio of around 76 and an annual revenue of 390 million. That multiple looks expensive until you realize the company is still early in its profitable curve. And we also have 390 million each year in revenue, which is actually almost their market cap. So that's very big. And also they have around 72 million in cash or something. So margins are rising, the business is cash positive, and EPS is finally in the green at about 5 cents. It's not much, but it is green. And literally the only thing missing for bringing the stock up and buying the stock, the intrinsic value lies around, $6.5 or something, and we are trading below $4. So it is already undervalued based on all of the good things like the margins that are rising, the business that is cash positive, the EPS that is finally green, and literally just being having net income, and just also the story of focusing on the fundamentals. All of those things brings it to an intrinsic value of actually a big double of the price of today. For Honest to reach $21, the math says we need around 70 cents EPS by 2030 at a reasonable PE of 30 that gives us a price target, which is simply as that. So, how do we get there? Revenue needs to climb from roughly 390 million to about 600 and 700 million. Well, in between that. So that's more than a double, of course. So net margins must expand from 2 to 3% to 10 to 12%. That means steady growth over 10 to 15% a year, plus disciplined cost control. Now, we know that we are fundamentally laying the ground, and you see that we are a little bit dropping quarter over quarter, while we were going up very nicely. But you also see that we're here 2 quarters lower than this quarter, and eventually went back up, then down, back up, then down, back up. So over the long run, we are not declining. We're just stalling a little bit. And now is the timing that we need to see from Honest, which are the revenue growths. Are there already revenue growths, or are we still laying some fundamentals? If you start to see that trailing 12 months is beginning to be flat, I do think that we need some guidance from the company that says that they are especially literally just focusing on the basis and the fundamentals, and that should bring a lot of value to investors and maybe bring a lot of investors back in. For now, we don't really have guidance on that. We also have not a lot of news. We only get news when there are earnings, so that's some negative point. But of course, if we look at Honest, and we do believe that this is just a fundamental layer being laid, and going further in the future, we can have revenue growth each year of 10 and 15%, which is now around 6% in guidance reported, then that can be a very nice investment over time, especially if the stock actually can get to $21, but that's far away from us now. So this isn't a fantasy. It's already starting, so gross margins did jump to over 40% this year. The company is running free cash flow positive for multiple quarters. Cost per unit are falling, and their mix is shifting towards higher margin categories like beauty and wellness. So they are actually bringing in new products and whole new categories. They are expanding gross margins. They are expanding the free cash flow that is positive. They have a lot of cash. They are reporting almost more than they are worth on the market. So the brand's core, clean, sustainable, trustworthy, still resonates with Gen Z and millennial families. At steady retail growth at Target, Walmart, and Amazon, and more DTC sales at better margins, and you get real leverage. Now, what turns it into compounding story? Well, once Honest delivers 8 to 10 straight profitable quarters, the market stops treating it as a risky turnaround and starts valuing it as a stable consumer compounder company. Margins expand, free cash flow scales, and suddenly a 30x multiple looks cheap. At that point, the stock doesn't need hype, it just needs consistency. So the final take is, yes, $21 is absolutely possible within 5 years. It requires solid execution, high margins, steady revenue growth, cost discipline, and continuous free cash flow. But the pieces are already falling into place. If management keeps this up, Honest could quietly 4x before most investors even notice. And I already believe that a double from here is actually the fair value for this company. So if you had something of value about this video, leave it a like, subscribe to the channel, and I'll see you guys later. And don't stress, I believe Honest is a good investment. I own a very small position, but I want to add when we get some more guidance and more info about their future guidance and future expectations, and maybe some hard black and white numbers. So that's what I'm looking at for Honest. I do believe a lot in the company, but it's one you will need to wait on for a little while. So thanks for watching, and I believe in $21 and already in a nice double from here for the fair value. Thanks for watching, and I'll see you guys later.